bankrupt. It doesn't matter, right? Correct.
And it is to finance most of the projects.
Perfect. Perfect.
Real estate versus not takers.
Lot of real estate and
No takers.
yeah, and no takers. Fantastic. Banks then went bankrupt. You sir, sorry, you were saying something. Same thing. I will give you a positive slide. I will not say negative unless absolutely required. See, the Sheikh had no choice. Dubai does not have oil. Let's get this clear. So, unlike an Abu Dhabi or right a Saudi, right, he does not have oil. So obviously he would have gone to consultants like us and said, "What do I do for my people?" And he was given a route. The route that he was given is, you don't have oil, convert yourself as a tourism center. Convert yourself as a financial services center. And moment you convert yourself as a financial services center, you will earn, right? That means be as Singapore. And that's how he started on his trip. And there were mistakes, but let's not focus on mistakes here. Right? You make mistakes sometimes, but let's learn from the mistakes. That's how the biggest mall of the world was produced. The biggest tower of the world was produced. They started when the economy was doing well. By the time they finished, right, Dubai was in trouble. And there's a very good study, by the way. It is known as the skyscraper curse. A lot of countries start, right, the skyscrapers when things are good. By the time they finish it, there's a study on that, right? And then he had that Palm Beach Islands, where people came and invested. Unfortunately for him, the subprime crisis happened in US. And now I don't need to tell this audience. That was a big crisis. Thank you very much, sir. Funding dried up and he got into trouble. Now I want you all to analyze this and link it to balance sheet. End. Introduction over. Now we'll look at each of this in detail, right? Each of this in detail, right? One fine day, the Sheikh comes in, and let's assume I am the Sheikh and you're all the bankers. The Sheikh comes in and says, "Excuse me, I have to pay you 8 billion. I'm sorry. I need a moratorium with a haircut." That means it's a SDR, sovereign default, right? I need a sovereign debt restructuring. And the markets were like shocked. Now, for the dear colleague who said how to deal with bankers, my humble request is, right, bankers hate uncertainty. If you're looking at a banker is not tuned to anything. If there's something that a banker gets very upset about is, right, a banker hates uncertainty. So for those of you who are looking at practical implications, let me come into my consulting thing and tell you all, the way I try and keep banks happy is I ask my clients, please keep submitting monthly, if not monthly, at least quarterly reports. The banker may not read it, but you submit it. So he feels that things are going as per normal. And this is the problem with Dubai. Bankers hated it because he kept saying till 3 days before the default, he kept saying things are good in Dubai, things are good in Dubai. And in fact, there was a slogan that was coined for Dubai: sun never sets on Dubai. Anything can happen in the world, the sun will never set in Dubai. It's only when, just a joke, not sarcasm, just a joke. It's only when he announced the default that people realized because the sun is not setting, it had burnt everything in Dubai. Okay, so my God, this is a big problem. And bankers were annoyed. And most of them, thank you, pulled back their financing. Some of them still continued their financing. And now I'm coming to the principles of finance. I'm going to flip this page and I'm going to give you 2 principles of finance which all of you all should remember for life. And I want to go to the younger Pankaj here. Let's assume, dear friend, some banks are willing to fund. Most of these banks have withdrawn. Let's say one bank, Hema ma'am, there is still willing to fund Dubai. And we are talking of commercial transactions. We are not talking of social obligations, commercial transactions, right? Will the bank which is willing to fund, will the bank charge Dubai? Simple question, sir, but I want the response to come from you all. Will the bank, most of the banks have withdrawn, saying Dubai is a bad case. Now we have to recover money, forget lending. Some banks are still saying, like one here, saying, chalo, we'll take this risk and we'll still lend to Dubai. Will they charge, simple one, will they charge a lower interest rate or a higher interest rate? A very polite gentleman. He was waiting for me to finish the question. Thanks for the spontaneity. First principle of finance. You may be a banker, you may be an analyst, you may be a CFO, pleasure having you here, sir. You may be a marketing head, you may be an operations head. First principle of finance, and remember it for anything and everything in finance. Thank you. Risk versus return. 2 principles of finance which you will remember forever, right? 2 principles of finance which you would remember forever. First principle is risk versus return. Thank you, dear Pankaj. Thank you very much. And I want the spontaneity to come. Obviously, a higher interest rate because the banker is perceiving higher risk. Excuse me, for the dear colleague who is talking about bankers, when you talk to bankers, please to show them lower risk. How? We will talk post lunch when I get into ratios. Right? When the banker sees lower risk, he will be comfortable with you. Moment he sees a higher risk, either he will not lend or he will jack up his interest rate. And the principle is very simple, right? Lower the risk, lower the return. Let me give you an answer. And let me explain this through investments, okay? Let me explain this through an investments, and I'll make it slightly funny because I need to communicate. My dad is retired, right? And let's say I go to my dad who's retired and he comes with this provident fund and he comes in and says, where should I invest? And suppose I tell him, Dad, you do one thing. You can invest in stock markets. And stock markets give you 40% returns, 40% returns. So you invest your provident fund and gratuity in the stock markets. It will give you 40% returns. The joke comes now. The only thing with this 40% is I'm not sure about the sign, whether it is going to be plus 40 or minus 40. Right? Right. Thank you. Dad would say, but just forget all this. I need my capital to be safe. Then please do one thing. Invest in RBI bonds. Safe. Right? Bank deposits. Right? Preferably nationalized banks. Right? Right? That is your safe. 8% you get. Lower the risk, lower the return. Higher the risk, higher the return. One twist in the story, higher the return expected. Whether you get, right? Whether you get it or no, right, is a call on the markets, right? On the same website, I'll not discuss it today, obviously, but I get a feeling some of you all will be, and especially some seniors are there, would be interested in project finance and valuations. I've uploaded the videos there. And I want to keep telling this, the two principles, that's all. For you all, at this stage, if you want to take it further, I've given you the source. One is risk versus return. Second principle of finance is time value of money. That's all. Finance is two principles. इतना आपको याद रखना है मेरे लिए. One is risk versus return. Second is time value of money. Again, let me ask some very simple questions. Right? I need to keep interacting with you all. Rohanji, very simple question. I'm sorry, but I need you to respond, young friend. Or rather, I'll not put it as a question. It's so very obvious, at least for this evolved audience. A rupee that I earn today is much more valuable than a rupee that I earn after a month. That's your time value of money. You may do NPV, you may do project finance, we'll talk, right? But at the end of it, there are two things in finance, risk versus return. So in this case, I've introduced, now the introduction is over with this. First rule, finance is logic. Second, if you look at jargons, look at the English behind the jargons, it will be demystified. Third, any situation that you face, sir, look at this, right? If somebody comes and says, I'll give you 28% returns, then you need to look at that investment and say, is there any risk in this? I need to analyze this. 28% in today's terms looks like it's very high. So can I see if there's a risk in this? And then the questions start. Having said this, let's finish balance sheet. What does the balance sheet indicate? I said it long time back, but I took a detour to satisfy some colleagues. A balance sheet indicates something which is known as worth, says the young friend, which is also right. I'll get the word out. The word is like this, but before the word goes in, let's analyze this case. The answer will come from you all. I'll go to Nitilji. So most of the banks have withdrawn. Some banks continue and they are charging higher interest rates, as a young friend said. My question is, why did the Sheikh get into all this trouble? I've been told by dear Ashwant, right? Ashwant sir tells me that the Sheikh is worth 10 billion. Sheikh is worth 10 billion. And the loan outstanding is only 8 billion. Right. Good. Right? But since I have given it to the colleague there, fantastic response. Right? I'm only wondering, why is the Sheikh not signing a check of, right, 8 billion? He's worth 10 billion. The amount is 8 billion. He could sign a check of 8 billion and give it. And then why could he not do that? No liquidity. Okay. So yes, sir. One sec. Again, we are coming back to one more dimension, the same dimension of business we are repeating. Right? Lovely. Liquidity, which is already covered. Book value of assets. Okay. Thank you. Rohanji, you were saying something.
The value of the assets that he is not actually what the value of assets is. Same with the demon, similar to the demon brothers thing.
Liabilities are more than the assets.
The assets today aren't what they expected them to be. The asset value is what?
Sheikh is worth 10 billion. Where has he invested? He has invested in real estate. Nobody is going to buy that real estate today. When he invested, its value was very high. 6 months back, 1 year back. Today, if you try, and distress sales never gives you that money. Sheikh is worth 10 billion. Where the Sheikh has invested? Thanks. Thank you for liquidity. I'm coming to the third aspect of business, right? And please note, I have not used a single slide. The answers are coming from you all. Okay. So Sheikh is worth 10 billion. Where has he invested? He has invested in shares of US-based financial companies. When he had invested, Citibank was possibly $25. Today, it's, right, when it got revalued, it was about $1. Sheikh's worth 10, and this is a bit of sarcasm, a bit of joke just to keep the session lively. Sheikh is worth 10 billion. He had invested in finely bred horses. See, if you have a lot of money, sometimes you do asset diversification also. Hey, that's those days. What do you do with that now, here? Nobody's going to pick it up from you now. Thank you. When you say worth, the third aspect of business comes in. Please note, and this I will give it to you. The third aspect of business is what is known as solvency. There are only three aspects of business, dear colleagues, right, which you have been answering. I'll give you the jargon. One, profit and loss statement, which indicates profitability. A cash flow statement, which indicates liquidity. Balance sheet, which indicates solvency. Rajiv sir, solvency is, as dear Rohan and as dear Rajesh ji said, what is the current value of your assets? What is your current value of your assets, right? Against, absolutely, sir. Against the recorded balance sheet value, which is the book value, right? Solvency is a very critical indicator. And sometimes you find you have taken a loan. You have taken a loan of 5 crores and you have purchased a house worth 6 crores. And now what happens, expert sir, is the value of the house, sir, please note, the value of the house is now come down from 6 crores to 4 crores. The loan against that house is still 5 crores. You are insolvent. Please note, it's a simple case of you are insolvent. 3 statements, 3 of them, right, answers came from you all, but the jargons I had to supply: profitability, liquidity, solvency. What does the, this is the introduction to the topic. Now each of this in detail, and we'll keep interacting, right? Nothing difficult in this. Please note, the first thing that you have to remember when you analyze balance sheet, ma'am, let me simplify this also for you all. First principle, Faridji, is, sir, imagine the company to be an artificial person. So if you say, right, Rajesh sir, is a person there. Jibu sir is a person. Dear Ashwat is a person. Anil Menon is a person. When I say Reliance Industries, imagine Reliance Industries as a person, artificial person standing in front of you. Kohinoor Hospitals, artificial person standing in front of you. Second principle. What are liabilities? Liabilities are nothing but sources of funds for the artificial person. Sources of funds for the artificial person. And sources of funds for the artificial person. And what are assets? Assets are nothing but, thank you, application of funds, thank you very much, application of funds by the artificial person. Get this straight and clear. 3 principles, an answer will come from you all. Imagine, I repeat, imagine the company to be an artificial person. Liabilities are sources of funds. By the sources of funds to the artificial person. Assets are application of funds by the artificial person. And the answer will come from you all. You will finish it for me. In fact, let me just go back and ask one of you all. Right? I think I've interacted with all of you all. Yeah, but sir, you answered. But let me come back to you. Banerjee sir, right? Let's say you're planning to buy a house. What would be the source of money? Right? What could be the source of money for you if you're planning to buy a house? Colleague makes it look so simple. My own money, thank you, is known as equity. Thank you. Equity is owners. I'll put it here. Definitely. Equity is owners' funds. What is equity? So this is how finance comes to each one of us. So if you look at a balance sheet which says equity, what is equity? Equity is owners' funds. Even before I could say anything, a colleague was so spontaneous. He said, if I am short of money, I'll go to the bank and borrow. Fantastic. That you call as debt. And debt is known as outside funds. Debt is known as outside funds. Two forms of liabilities. One, equity, owners' funds. Second, debt, which is outside funds. The company will raise money through these two and invest in this side, which we'll look at in detail. This is the introduction to the three financial statements. I've just wanted to prove a point. Answers are only coming from you all. The jargons I'm putting there, you could refer to it. Now, after a short tea break, we look at profit and loss, cash flow, balance sheet in detail. And then we'll try and figure out, right, what to look at and where to look at. But before I get there, any questions on the intro, please? Any questions on the introduction? Any, please?
Yeah, when any firm announce balance sheet or
Financial
present
results.
balance sheet, at that time profit and loss account is there inside the balance sheet. But what about cash flow statement is there or not?
Very nice question, ma'am. Ma'am, as of today, the rule is whenever financial results are announced by companies, they have to give all, right, obviously, sir, yeah, thank you. You have to give all the three statements: profit and loss, cash flow, as well as balance sheet. And can I say something? And I know you, ma'am, you're a very, very serious colleague. I should say serious student. In fact, most analysts, like people like me, we start with profit and loss and then immediately go on to the cash flow. And it's a mandatory requirement for every company to submit all the three statements: profit and loss, thank you, cash flow, and balance sheet. Right? Till 99, we had only two: profit and loss, balance sheet. Then आपको बनाना है, आप बना दो, is what companies will tell the analysts. Right? Now, SEBI Companies Act says, when you submit, we want all the three to come. Right? And that's made the job of bankers very easy. Right? When you look at the cash flow statement, which you will do, right, you can easily understand where the company is heading. Thank you for the question. One more? Yes, sir.
Last one on the sovereign.
Pleasure, sir.
Just kind of a logical thought that came. I always, used to wonder when I read in the papers. So countries after countries are going into this crisis. Because these markets are mostly a zero-sum game, all transactions. If everybody is losing money, where is it all finally going?
Nice question. Very nice. It's a very logical question. There are people who are making money, sir. Like there's a gentleman by the name, very nice question. There's a gentleman by the name of George Soros. US collapsed. He made tons of money. There's another gentleman by the name of Paulson. Right? And markets, a lot of people lost money. Right? It's a zero-sum game. There are some people who, right, gain. The best part of these people is, right, they come out and announce that they have made money after the event is over. Right? One big name is George Soros. Right? Very nice question. It's not that everybody is losing money, sir. Right? There are some people who have really, really made a killing. Really. And the name I can repeat. Some names you should remember. One name is Warren Buffett, which I'm sure all of you remember. Second name is George Soros. And who are these guys? They are what are known as hedge funds. Can I add something to it since such lovely questions are coming from you all? Hedge fund is a rich man's mutual fund. What is a mutual fund? A mutual fund will take money from common people and invest on your behalf. George Soros, right, Paulson, they all run, I'll write it down, sure, right? They run what is known as something extra, but I owe it to the audience, right? Hedge funds. Minimum, if you want to participate in George Soros hedge fund, he says minimum $10 million. And that also he'll pick and choose. He'll say, yeah, sir, okay. No, not you, but I'll take you. Right? That's how he's been operating. Right? And if you get time, right, I think Jivu sir should read it. The very good book by George Soros where he has written this is a book which is known as The New Paradigm of Finance, where he has explained how he's been looking at the financial markets now. Nice question. Any other questions on this? Yeah, some more. Yes. Yeah, we will look at all this in detail. You want some idea on application of funds? Some idea? Okay, why not? Sure. I'm going to look at it in detail. No, but out of respect for the seniority, one application would be simple fixed assets. No, sir. No. I'm going to do it in detail, but since sir wants to have an idea, fixed assets. Like you, right? Your company would buy land, building, plant and machinery. That's a fixed assets. Like that, there are some more assets which will come. We'll look at this in detail, sir. The idea was just to give an introduction.
But he's saying that
One sec. Yeah.
I know we will go into more detail later, but in terms of liabilities or equity get zero.
Huh.
We would do later on this, I think, to get an understanding better of what is better.
Which one is better?
Which one? How to analyze what is the correct route to take to raise funds.
Okay. What is the debt equity ratio?
Either sell equity or to raise. How do you analyze that?
Is this your own company by any chance?
Yes, family.
Right? You understand really what is return on investment. I'm sure you understand that. Okay, I'll do that. In passing, please know this is a finance for non-finance, but I'll respect your question. I'll try and address it. Right? One more. Pankaj ji.
Many European companies, especially the automotive companies, who are coming in India, already have their account. They are setting up here manufacturing plants. They are selling vehicles in India only. So, whose GDP will improve? Indian GDP will
Nice question.
or European?
Very nice question. What a question. Yeah. This is a very evolved audience. See, please understand, if they are selling it in India, right, and they have registered as a company in India, it will be included in GDP of India. So it will be included because they have set up their own company in India, which is in operations. No, they have not set up their company. We are importing their cars. Then it will not be counted as in GDP. One sec. Let me just satisfy the colleague. Right? So GDP is whatever you are producing in India. अभी मैं produce कुछ नहीं कर रहा मैं बाहर से I'm getting whatever this, right? One of those cars, the famous cars. I'll just import it. That will not be counted in our GDP. Yes, it will be taken. Right? Pardon?
If you provide services for this, then
If you provide services for it, that services part will be counted. Services part will be that will be counted. You have to take it only in that particular jurisdiction. Is he there in that particular jurisdiction? Nice one, huh? Nice question. One more, huh?
everybody now is talking about this whole retail FDI.
Huh.
So
I will not talk about
no,
it.
we
Huh.
have like say 100% FDI
Huh.
in retail.
मत करो ना political हो जाएगा वो.
Will the GDP go to the country or will it go outside?
हाँ, this I'll answer. हाँ, ठीक है, okay, right. This is very controversial. फिर वो क्या होता है ना? I have my opinions, but it doesn't matter. No, Yashwant ji will obviously disagree. He is also a professor, and this forum will get diluted. That's why I'm not talking about it. And that has a plus and minus, right? So I'm sorry, I mistook the question. Is it good or bad? Now I understand. If they come and set up base, it will add up to our GDP.
What if they own on the shares of the company? A foreign company
Come and sets a base.
and sets a base.
Like this.
Shares of the company.
Indian GDP will go up, but I'll leave it at that. The only thing is they will add to the wealth, but you see, are they going to displace a lot of people is what the worry is. Right? So the biggest worry that we are, and I'm leaving this topic at this, okay, is that will they displace the mom and pop stores?
But they will increase GDP.
If the accretion is more than the destruction. I hope you got my point. Okay? Right now that is where the debate is. Is it going to be more or less? Which is where I let it be. Okay? There are, Rohan, in this audience I'll not discuss, but again I like to say that I've written about it. There is a plus and there's a minus to it also. And the facts show that somewhere it is going to happen. But then the fact is, you can't just bring in reform for the sake of reform. You will have to look at, right, the things which are put in place so that there's an alternative for others also. One more. Sir, you were saying something, Rajesh ji. Answer?
I was just saying, hedge funds you said.
Huh.
Hedging is basically, you can say it's not legal, it's illegal. So you're talking about hedge funds or normal hedging?
Dollar hedging hai na?
Are these they are two different things or what?
No, one sec. Yeah, let me just clarify that hedging is not illegal, bete. Hedging is absolutely legal. What is hedging?
No, hedging means, as per my understanding, is basically if you're investing in a, for example,
Huh.
share, that share
Ha.
Okay, so I'll say that I will buy or sell this share. If the share goes to 815, and that will definitely go to 815. So I'll tell my clients that you should buy or sell this share because I have some links in that particular share market, share companies, and all. So this is what I'm saying is hedging.
That's where the mistake is. This is not hedging. What you're talking about is known as insider trading. This is different. You've been reading, but you got the term wrong, my friend. This is insider trading. And this is also, right, where many players in the market do it. Here we are talking of hedge funds. What is a hedge funds? And first is hedge, right? Please understand what does the word hedge mean. Let me also correct some dear friends, right? A hedge only means this guy is going to take risk. And why is it a rich man's mutual fund? Is because he's going to take very high risk. And because he's taking very high risk, he may give you very high returns. Or he may just get wiped out also. That's the reason why, if you see George Soros, he does not let anybody and everybody come and join us, right? Give him fund units. He says, I don't want your finance. If you are ready to take this loss, come in. Now, coming back to the point, what I really liked about your thing is, I'll still take a positive from your discussion. Hedge funds are not allowed in India. I'll finish this discussion with that. But please note, hedging is not illegal. Hedging is legal. Like immediately Yashwantji said, dollar rupee, forward le rahe aap. Sudhirji would do it time in and time out. Yashwant sir, you would talk about it. That is a hedge product, forward. So hedge is definitely legal. Why hedge funds are not allowed in India? This is for the bankers. You see, hedge funds, I'm not talking of hedging. Let me again say why hedge funds are not allowed. See, hedge funds are normally very secretive. Can I use your term? Secretive investment animals, as some colleague calls it, right? So they don't like to disclose their portfolios. Now, what SEBI says is, if you see mutual fund, a mutual fund quarterly, they have to tell you where they have invested your money. They have to disclose their NAV on a daily basis. Now, if you go to a hedge fund says, no, I will not disclose my portfolio. It's a proprietary secret. Because I am taking this, somebody else will copy it. India has taken the route saying that if that is the case, we don't want you, right? So in Indian context, we only have mutual funds. But the question that my dear colleague asked is in US and others, who are these guys who made some tons of money? Some of these guys are coming from the hedge fund industry. Coming back.
They can operate from outside India and act as FDI.
No.
Can
Right.
foreign funds invest in India?
If you say hedge funds, it will only come in as FII. Right, let me again one last thing, but let me satisfy the colleagues also. Right, we are coming out of it, but 2 more minutes. But since there are questions, please understand there is a difference between FII and FDI. It's worthwhile knowing this, though. FDI stands for Foreign Direct Investment. Rohanji, FII stands for Foreign Institutional Investors. This is foreign direct investment. FII is foreign institutional investors. Yeah, let me also satisfy the Namita also. There's a third way the country can earn foreign exchange, that is through ECBs. External commercial borrowing. Thank you, Pankaj. 3 ways a country can earn foreign exchange or can get foreign exchange. FDI stands for Foreign Direct Investment. FII stands for Foreign Institutional Investors. ECB stands for External Commercial Borrowing. FDI means the company will come, and you can see all these colleagues, MNC colleagues, the company will come, set up base in India, generate employment, that is FDI. FII, they will not set up base and start operations, they will only buy shares of companies. So koi Reliance ka shares kharid liya, SBI ka shares kharid liya, that is FII, right? Some of the names of FIIs, Morgan Stanley, right? FDI, you can look around, there are dear friends working with MNCs, that is FDI. Any government policy will always try to encourage FDI, because FDI is more permanent form. It generates employment. Thank you. FII is more hot money. One line, but I don't want to take it. I write hot money means, sir, it can go back anytime. I would write opportunistic, right? They have come and invested. Kal unko laga ki nahi, Brazil is better. Russia is better, so Indian shares they'll sell and go. MNCs cannot do that because they have purchased property, they have, right? So unko, for example, Enron, even if they wanted to go back, they could not because they already set up a plant. One line, China's success over India is that, I want to put it positively, is that it has attracted more FDI, right? Okay, I have to say this, Indian forex flows were more FII dependent, which partly answers, Rajeshji, your superb observation why rupee depreciated more also, which you brilliantly brought up, okay? FII is, Rajesh, a hot money. If they see that, nahi, kuch nahi ho raha India, my policy is not good, yaar, or that's a better country. Or forget everything, we'll buy dollars. There might be nothing wrong with Reliance. Reliance must be still doing very well. Or maybe some gas, somewhere 20% drop, but they would simply sell the shares of Reliance and go. That's your hot money. ECB is external commercial borrowing. Please note, RBI policies will be, the government policies will be toughest for ECB because it is a borrowing. And please remember, whenever there is a borrowing, over a longer period of time, more foreign exchange will go out. Because loans means you have to pay interest. So out of these three, which is the one which typically RBI will be very controlled? It is ECB. That is why what RBI says, for the dear colleagues who want ECB guidelines, up to 750 million in a year, automatic approval. Anything above 750 million, you have to come and take the permission of RBI. And ECB, typically Indian corporates like to bring in that used to like to bring in foreign exchanges because most of it was coming at very, very low rates. And one last jargon, right, on this, since we have covered so much, let me give you one more, okay, which is known as whenever any borrowing is done in foreign currency, whenever any borrowing is done in foreign currency, it will be done on LIBOR basis. Let me give the full form, Rajeshji. London Interbank Offer Rate. London Interbank Offer Rate. Right? What it basically means is, right, banks based out of London, what is the rate at which they are lending and borrowing with each other? So if an Indian corporate goes abroad, they will get loans at LIBOR plus, right, 2, 3, whatever, thank you, right, LIBOR plus spread. No, never, right? It will not be minus, spread will always be plus, but LIBOR itself can come down.
But if LIBOR rate is more than the Japanese interest rate, Japanese national interest rate.
No problem. So then the rate will be adjusted there. Please remember, corporates will always have to pay something, this is always plus over this rate. And why ECBs are so very popular, LIBOR, if you take LIBOR at, let's take a LIBOR just for calculations at 1%, plus spread of, let's take 2%, as Sir said, these loans were coming at 3%. But Abhi, one sec. All these guys are now stuck. All these guys are not stuck. And that's the first thing, right? Why? Because when they raise these loans, thank you. When they raised these loans, dollar was 45. And now when they are coming to repay back these loans, thank you for the smile. Now you are understanding finance. Rupee has depreciated. And that's where, right, typically one thing that, this is for the fellow bankers, right, whenever in the debt portion, when you see ECBs, immediate question that you should be asking is, right, when is the repayment due? Is it immediate? Then we have got a problem. If it is no, over a period of time, there's no problem. ECBs look cheap because you're looking at only interest rate. But there is another risk, dear colleagues. My closing line for this session, we'll take a 15-minute break, take it forward, which is known as foreign exchange risk. Whenever the rupee dollar keeps moving up and down, we know what is known as foreign exchange risk. FDI, FII, ECB. We'll take a break, take 15 minutes, come back, right? We'll take this forward one by one. Please take a break, colleagues. Pleasure. The same, right? Some of my dear colleagues wanted my email ID. It's a pleasure, right? In fact, that website is also it's absolutely free. The idea is to give back something to my profession, right? In case you have any queries beyond today, here is my email ID. Please do write, no problem at all. The only requirement and only request is pass it on to the youngsters. Because a lot of people get scared of finance, and that's something which disheartens me because it's one of the easiest subjects possible if you start applying logic. Okay.
So what it is, Anil R.
Menon1, Pankaj sir, at gmail.com. Please don't hesitate. If there is a query, write. Just give me 2 or 3 days to respond in case I'm traveling, but I will respond. In fact, I like if people are able to gain something from the profession. So let's start profit and loss. I'm missing dear Pankaj, but I'll get started. I'm sure he'll join in, right? So we are having a statement which is known as profit and loss, which indicates profitability. Thank you for a wonderful observation during the break. Wonderful, Mitulji. That was a very good application. So here we go. It's a statement of income and expenses. Right? So this is email ID anilrmenon1 at gmail.com. Profit and loss statement is a statement of income and expenses. So here we start looking at things in detail. It's logic, simple logic. So here we go with the first analysis. Sorry, some names have to be mentioned. So but the idea is to give you practical cases. Bombay Dyeing announces a 40% increase in income. So this is not impressive. That's right. Venkat sir, Anil Menon is not impressed. What could be the reasons? Analysis starts. Right? 40%, Shwanji, sir, 40% increase in income. Still, analysts are not impressed. What could be the reasons of this? Right? So let's take 3 or 4 reasons. Again, looking forward for interactions. Yama ma'am, what could be the reasons? 40% increase in income. Why?
Maybe the material price gone up.
Superb, ma'am. Right? And I like your spontaneity. Mr. Menon, 40% increase in income. Lovely. But what about if expenses have gone up by 60%? What are you looking at? That means, right? Thank you. Don't focus on top line. Focus on bottom line. First rule. So first analysis, thank you. Right? Bombay Dyeing, 40% increase in income, not impressive. Maybe because the focus on bottom line. That is net profit. Lovely. Not to discourage you, ma'am, but that was a wonderful analysis. All right, one sec. Roshan, always a pleasure. Right. Let me just finish. I'm sorry, ma'am. In this, your analysis is very good. Does not apply to Bombay Dyeing. Bombay Dyeing's expenses have gone up by only 15%. 1.5. Right, ma'am, wonderful. But I'm just trying to encourage some more discussions. Right. So, ये आपका thinking अच्छा है, but this does not apply to Bombay Dyeing. But still, we are not happy with Bombay Dyeing's 40% growth. Even though expenses have gone up by only 15%. So actually, net profit also has gone up. So very good point. Does not apply to Bombay Dyeing. What could be the other point? Sudhir sir. You look at gross margin. Okay. So you're coming. Okay. You will come back to gross margin. You look at the. Okay. You look at direct income and direct expenses. Thank you. Thank you very much.
Raw material cost.
Agreed, sir. Balaji sir, that point I have accepted. Agreed. Can we have some more thinking?
So net worth may not have increased, even though net profit has
One sec, Lakshman sir, I'm giving it to you. 1 sec.
net profit has increased, but net worth may not have been increased.
Pankaj sir, 1 sec. I'm sorry. I have not understood what you're saying. I'm not saying you're wrong. I have not understood.
Net profit may have increased.
Agreed.
But the net worth of the company may not have increased simultaneously due to the profit. I mean, the net worth.
Sir, senior, and you are a respected friend now. If net profit increases, net worth also will increase. Right? That's why I'm trying to understand what you're saying. So, I'll come to each one of you all. It'll be a pleasure. So, in this case, sir, that was lovely. Gross profit. What else? Anuj, you put up a hand.
Basically, just like a case of
Sir, you will be the last to speak. You will be last because you got the answer.
just in case of Mukesh Ambani, he is very cashless right now. It's just because
Okay, okay, okay,
That is why the income is very low.
right, okay. Sir,
Cash flow, problem with the cash flow, there is no cash coming in. You know, though.
sir, मेरा ही मुझे dose वापस दे रहे हैं लोग, okay, right, okay, which is very good answers. On a lighter note, I'm so happy. Okay, maybe they are facing, this is good here, lovely, what else can a trader ask for? Maybe they are facing cash flow problems. Agreed, sir. Sorry, Bombay Dyeing is not facing cash flow problems. Still, we are not impressed. What else? Superb analysis. See the way you are speaking. Okay. One sec, sir. One sec. It will be impolite. Colleague here.
What about the not booking the entries on time? So if you, so for the last quarter, period, last quarter, I've manufactured certain goods, but I've not billed it on that, maybe because I've billed it late. So it shows 15% increase or 40% increase because they're late.
I just said this is one way you manipulate your statement. This is one way you manipulate. Say, one sec. This is not what I wanted. But आ गया ना answers ऐसे ही आते हैं. No, I learn a lot from FMB kids. Though they call me finance faculty, I say I am privileged to be with FMB team of SPJ. There's young friends like him who come and they tell me business secrets, you know, right? And then you understand a lot. I am from Bajaj. I have done an MBA, but believe me, it's more practical finance that really is more interesting. Fantastic. So maybe there is some billing cycle that they are playing, and I don't want to talk about SMEs. Even Microsoft does that. Right? You know, it's a very simple way. They developed a product, and excuse me, even a builder can do that. Right? I'm not talking of any specific builder. A builder gets an advance for a flat. He books it as income. Brilliant, huh? Excuse me. Suddenly you will see his profits will go up because उन्होंने वो income दिखाया, उसके सामने cost नहीं दिखाया. Not even a single foundation has been laid, but he gets an advance. He's right. It's an income for him. Brilliant. This is known as financial shenanigan. This is known as financial manipulation. Okay, so maybe there is some, right, financial shenanigan here. Rajesh sir, there is a, I'll turn this page, come back here. There is a good book which is named as Financial Shenanigans. This book is by Hull, Hull. And it shows how companies tend to manage their accounts. What are all the frauds that people can do? It's a 200-page book. So that's where the joke comes now. At the end of 200 pages, Venkat sir, the author writes, this list is not exhaustive. So after 200 pages, he writes this. He says, this list is not exhaustive. Whatever I have observed, I have done it. So he's brought out the Microsofts of the world, the Gs of the world saying, accounting mein ye log gadbad karte hain and this is how things are. So very good point. But sorry, I think Bombay Dyeing did not do any financial shenanigan, no manipulation. Still analysts are not impressed. What could be a reason? One sec. Now I'll take charge. I got some very good responses, but I think we are missing the boat and I'd like to go to a dear senior. Sir, I'll give it to you towards the end. That's my promise because you have already answered. But before that, I want to get two more responses and I want to come from sir, right? Sir, as a parent, answer will come from sir, right? As a parent, my son comes to me and says, he has got 4th rank. My typical response is, right? My typical response is, but last time you stood 3rd in your class. This time it is 4th. I'm not happy. Why would I say that, sir, to my son? Sir, I would like you to speak. Why would I say that?
Because he's performed less than what he had done in the last.
This is, thank you, sir. This is what a banker calls as absolute analysis. Hey, what are you saying? Right, thank you, sir. Right, thank you. Last time Bombay Dyeing grew by 2, right, thank you. Last time was 70. One quarter back it was 50. This time it is down to 40. What are we getting excited about? Right? Thank you. Word is absolute analysis. The jargon is absolute analysis. So what could be another reason? Thank you, sir. Another reason is you look at that entity, maybe my son, maybe Bombay Dyeing, and say, hey, what has been this performance? Please note, Pankaj sir, you wanted this. My bankers, my young friends, right? You will do what is known as Q on Q. Sushil ji? Quarter on quarter, year on year analysis. Quarter on quarter, year on year analysis. So you will look at this analysis and you will look at it and say, excuse me, over this quarter, I think this has not been good. Over this has not been good. So you look at that person and say, hey, you are 3rd, yeah, now you are 4th. So your 40% is not good, you are dropping. Correct. Now we'll go for the 3rd point, right? Fourth point, one sec, I'll just finish 4 points. Fourth, I want sir to speak, then I'll take some more points. There is another way of looking at it. How do you analyze, right? There's another way of looking at it. Right, lovely, lovely. Let's say I have a neighbor, lovely. I have a neighbor whose daughter has stood second. If my son has stood fourth, the first thing that I'll do, which is very wrong parenting anyway, right, is that, what is this here? Fourth, she has stood second in comparison. Thank you. So you put up your hand also. Thank you. Right. This is known as relative analysis. Thank you. Relative means you will compare. As an analyst, as a banker, as an owner, you should always be looking at both absolute analysis as well as relative analysis. Relative analysis is also known as peer comparison. What is peer comparison? Peer comparison means I will compare dear Rohan's company with his nearest competitor. Excuse me, Yashwant sir, you are so happy about Bombay Dyeing growing by 40%. Competitors are growing by 70%. That means, but, right? Yeah, absolutely. You should be your peer, apple to apple, correct. Instead of saying peer, if you want to say apple to apple, also correct, sir. Please note, moment you do relative analysis, suddenly you realize, oh my God, his market share is shrinking. So, what are the forms of analysis that we can do when you say an income statement? One is you will focus on bottom line. Thank you, ma'am. Second is you will do absolute analysis. Thank you, sir. Thank you, the young friend there. Thank you, sir. Is you will do relative analysis. Sorry, even this is not applicable for Bombay Dyeing. Bombay Dyeing is a different story altogether. So, first point accepted, second accepted, third. What could be the fourth point? I'll give it to you, sir. You said that right at the beginning.
One time income.
You will ask for what is known as, thank you, sir. You will ask for what is known as composition of income. Income is of two types. What are the two types of income? This is how finance is. So simple and logical. One is known as core income. Other one is known as other income. If there is one thing I want you all to take back today is, you should just, each of you all, if you can just say, yeah, finance is logic here, kuch nahi hai, I can handle things. That's the strength that I could get as a trainer. Please note, core income, ma'am, sir, is recurring income. Right? Right? Is recurring income, operating income. If you are comfortable, Rajiv sir, saying operating, God bless. Faridji, for example, I have nothing against Bombay Dyeing, but I have to give cases. I'm sorry, right? Bombay Dyeing has sold real estate and relocated its plant to Nagpur or some place. So now that property that it has sold in Mumbai has coming in as income. Now the question that you all should ask as an analyst, and I'm sure Mr. Pankaj, you realize is that, hey, this time they sold this plant and income has gone up. Thank you. Next time what would they do? Point, wonderful. That means you should note, right, I'll put the fourth point. How do you do analysis? The fourth point is, please note, identify your value driver. What is your value driver? Your value driver should be your core income. Right? If that recurring income, for it, sir, is coming, operating income says, dear sir, if operating income is repeatedly going, banker takes it as a sign of strength. How do you? You will look at, very nice question, very nice question. You will look at what is the, I'll take questions, 1 second, right? The young man had a good question. You will look at what is this company formed for. So how do you identify core income? The core income is, you can identify it by looking at their financial charter. Nice questions. In India, we don't call it financial charter. In India, respected colleagues will say, we call it as MOA and AOA. Memorandum of, you would have it. Memorandum of Association and Articles of Association. So, usme malum padta hai why, what this company is formed for. And then you identify what is core income. And that, or what sir says, operating income, that should keep growing year on year. If your value driver is not that and your income has gone up one last time, I'm sure all of you have got it, but as a trainer I want to certify. If your income has gone up through this route, thank you. It is, I'm not saying it is bad. No, 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 no. I'm saying it is a red flag. What is a red flag is a banker will come back, an analyst will come back and say, what's happening here? What are this? Is there something wrong in their core business? Oh my God. In their core business, actually, they are, right, they are losing market share. But income has gone up because they have sold property. I think, right. One second. I'll stop and say any questions, then come. Let me just take everybody along with your permission, right? Please understand, moment you see this happening, the first thing that you will state back and say, does this, is something wrong? Is this going to be a perpetual thing? Oh my God, over the last 3-4 years, this company has been losing market share. But, right, this year it has pushed the income up because of other income. It is a red flag. What is a red flag means? You will stop and ask questions. As a banker, we'll stop and ask questions. Pankaj, you wanted me to address this, and pleasure. We will stop and say, sir, what is happening in your hospital business? Is there something wrong? How are you restructuring? Oh, then you may take a call. This is temporary or permanent. That's a discussion by itself. Point is, right, core income and other income. And now I'll take questions. First question already asked. I'll take other questions also. Other income is also known as extraordinary income. Please note, anything which is not defined in your MOA and AOA will go as other income. Please do not think sale of real estate is other income. Yes, it is other income for Reliance Industries. But for DLF, it is core income. So how do you know what is core income? You will have to link it back to what is known as the financial charter. Before I go to expenses, which will be a pleasure, can I take some more questions, some notings? Sudhir sir, you want to say something?
That is why your gross margin is very important. Which is any income and expense directly related to your core business.
Absolutely, absolutely, right? Directly related to your core business, directly related to, with your permission, sir. Thank you for reiterating the point, related to your value driver. Jargon that we use is value driver. I have got one more question. Yes, Nitul Ji.
I want to share.
Please.
So, like, people see that there is no income in the core income,
Huh.
and to maintain the income in totality, they sell off their assets and form the income, and that's how they say we are profit-making company.
Yeah. And typically, you're right, right?
They manipulate this.
Right. But the fact is, right, today they may take some investors for a ride. But most of us, they can answer in this forum, within half an hour, I said it's a good audience, right? Nowadays, to get away from this, it becomes slightly, because as a banker, first thing that we are trained as a banker is, if you see this spiking up, go and ask the client a question. Yeah, one more, please.
Sorry,
Yeah.
The thing is that people, the companies have started putting in two different arena of business. Saying one, the core business. Secondly, the asset manipulation. And that's how they show that the income going out very high. And
Asset manipulation.
This is a part of my business. Like they buy the assets, they sell off the assets, they form the showrooms and the units.
No, is this a part of their core business?
Yeah, no, it's not a part, but they keep on doing this every year.
No, but again, I'll come back. Is this very nice observation? Is this defined in their MOA, AOA?
No.
Then it will be taken as other income.
For example, people buy the plant in Vapi area where there is an exemption on taxes.
Okay.
Later on, Jammu and Kashmir, the state government declares that we provide the area and exemption on taxes. They shift entire plant over there, and this is done every 2 years or 3 years.
It's a red flag.
And this is how they.
Fantastic. This is a red flag. This is a red flag. Fantastic. This is a red flag. No, one sec. Beautiful, huh? No, I'm not. I'm in the business of selling plant and machinery. That's one case. Now I'm giving you another case. In that case, it will be a core income.
Yeah, that is good.
Very nice observation, huh? What could? Any other observations? Yeah, sorry, I didn't see.
When banks give loan to such companies, or what is the percentage they put on value drivers? Is it like 60%, 70%, and then the relative analysis becomes how
Very nice question, right? Typically, other income, if it exceeds more than 10%, very nice practical question, right? More than 10%, bankers are uncomfortable. So if you're 100 rupees you're earning, and out of that, 7 rupees is coming from, right, sale of scrap and other things, that's okay. But more than 10%, then it's, I'm not saying it is bad, please note, then it is a red flag. Then I'll go back and ask questions. Like, what is happening in your normal business? Anuj, one sec, Venkat sir, question? Right, one sec. Anuji, bole na.
Just one thing, just read an article regarding this company, Mukesh Ambani, that he is basically right now, and he's very cash rich right now. What I just wanted to ask a question is basically, he is basically having revenues, but not having any capital investments for over the period of say 10 years. So is it good or is it bad?
We'll discuss. We'll discuss. You brought this up earlier also. We'll discuss. Don't worry. Right? And I will not talk in terms of Mukesh Ambani. I'll give it as a concept. Okay. Right. Hey, whatever we talk about this group here, like I'll tell you one thing. I respect this Mukesh Ambani group for project execution. You can, if you want to read, and I'll edit it out from the video recording, right? If you want to read all this Hera Ferries which has been done, then there's a book which is known as Polyester Prince, right? Officially, right?
There is an alternate available, the Ambani Brothers, which is same by Ms. Macfield. It is available.
Right. So, but please understand, let's not, thank you, sir. Let's not go and say something negative. The fact is they are known for their execution skills. So I'll come back to the Reliance Group. I'll talk about, again, what Anuji is talking about is working capital. We'll come to that. I want anything on income before I go to expenses. Yeah. One sec, sir. One sec. Yeah.
Now it's an example of shifting Bombay dyeing from Mumbai to Nagpur. Do the analysts think about the cost implication? For example, the next year, in Nagpur, the operating cost may be less in one account, that is labor cost may be lower. But the second thing, shifting of the goods, I'm talking about practical too, getting the raw material from to Mumbai may be lesser than all this taken into account while deciding what will be the effect on this cost.
Absolutely. And not only that, the analysts will also go one step further and think what is happening to the main brand of Bombay Dye. Are they losing their brand value or no? So all this wonderful. The entire cost implications of shifting is taken into account.
And the effect, I'm not talking about the brand, I'm talking about whether
the
operating cost
is taken, it's purely taken into account. One more hand. Yeah, Rajiv.
Two questions. Where will that brand value, brand value be projected? Where will it be shown in the P&L? Number one. Number two is you talk about this financial charter. In India, you said it is AOA and MOA.
What does it stand for? Sorry, I went fast. MOA stands for Memorandum of Association. AOA stands for Articles of Association. Like, sir, absolutely. What is the company formed for? Like in your case, Kohinoor Hospitals, you will have a statement, which is the statement of purpose, which is nothing but Memorandum of Association and Articles of Association, which you have already filed, sir, with ROC. Now, there's a first question response. So, brand, achha, good, please keep questions coming. Please note, assets are not disclosed in profit and loss. What profit and loss only indicates is operating expenditure. Thank you. Assets are disclosed, but they'll be disclosed in balance sheet. Okay. Now, where brands, we'll talk about a bit later, expenses. What are the expenses? First expense that comes is what is known as, again, logical. My humble request is logical, production expenses. And obviously, once you produce, what do you do, right? Once you produce, the next thing that you will do is you will sell. So, selling and distribution expenses. No, I need something to support the operations. Sudhir sir, right? Administration expenses. See, it's so logical. It's as logical as it. Then you will say, okay, then there could be some other expenses which is known as miscellaneous expenses, which is specific to the industry. Now, if I remember Hema ma'am's discussion, which I met ma'am sometime earlier, she would be in a specific industry where she might have to pay licensing fees. So that is your miscellaneous expense, which is industry specific. Then you have one more expense, promotional expenses here, right? One sec, ma'am. You will give me the heading here, right? You will give me the heading here. Once you subtract that expense, you will come to, Yashwant sir, you wanted this. You come to what is known as EBITDA. Let me take total charge with your permission. Earnings before interest, tax, depreciation and amortization. I'll explain this in detail. As of now, please remember, EBITDA is earnings before interest, tax, depreciation and amortization. Earnings before, I repeat, earnings before interest, tax, depreciation and amortization. Very clearly, what it indicates is nothing but earnings before interest, tax, depreciation and amortization. So we'll talk about this a bit later. Amortization. A stands for amortization. I have two queries before I take questions from you all or I take interactions from you all. A stands for amortization. What is this? We will see. That is, I'll simplify it. You leave it to me, I'll simplify it. One thing. Why do you want this breakup? Why do you want this breakup? What is the reason for having a breakup? What is this reason for? Two questions. The first question comes in. Why, Ashwin sir, why do you need a breakup like this, sir?
This will help to analyze, like for example, when we are going to do analysis, like these are the expenses I have, these are the operation costs I have, and these are the miscellaneous and admin. So I'll come to know like where I'm putting money or expenses, and then like when I subtract my taxes and all, then I'll get a net income. Like
I am not taking a second, right? Okay. Actually, Ashwin sir has answered it, but think out of respect. Rajiv,
Something to come to a break-even analysis.
good. The entire analysis, right, sir, with your permission, I think these colleagues have done it, is to identify your cost drivers. Jargon comes in, cost driver,